we have for Nifty and Bank Nifty for the next week, followed by few stocks which look strong to us or weak to us based on the price formation that we have. So yeah, before that, in the end, we conduct a small poll. So please do participate in the poll, and then we'll start with the Q&A session. So before we talk about our views or insights, this quick disclaimer and disclosure that these observations are not trading recommendations. So once we share all these observations, the idea is to use your own discretion and take help from the financial advisor before making any trading or investment decision based on this. Now, after 4 weeks of successive rise, market was in a positive mood for most part of the week. But today, that is on Friday, we saw that market drifted lower over 1%, and that eliminated all the gains for the week, and we ended almost on the flat note. So both Sensex and Nifty ended almost on the flat note, marginally in the green, and we had a similar trend across the sectors also. So barring realty and FMCG, majority of the sectors gained marginally or ended slightly on the negative note. So energy, media, and financial services, they ended in green, while pharma and the banking index finally settled with the marginal cuts. However, on the stock specific front, the story was different because select stocks from the Nifty 50 basket, they did exceptionally well. So look at this list, like Adani Ports, iShares, SDFC Life, LT, TechM. So all these stocks gained in the range of 3 to 10%, and at the same time the correction was also equally sharp. So we had Apollo Hospital, UPL, Tata Steel, Coal India, Hindalco that ended in the green and in the red. So it was more of a kind of a mixed bag when it comes to the index majors, and that is how we saw that market ended almost on the flat note. Now, what to expect from the key indices next week? So this is the daily graph of Nifty 50. So we have been discussing this this broader range that Nifty has been trading in since October, and last week we managed to surpass this level of 17,800, the upper band of this range, and we were hoping that market should inch toward 18,100. That's the next major hurdle. So we come almost closer to that zone. We almost tested 18,000 mark, and today we saw that market drifted lower and again come closer to this upper band of this range. So what it indicates is that if you closely see this area, that Nifty has engulfed the gain of last 3 trading sessions. So it was not the decisive move that we were seeing, and last week also we have discussed about this, that the entire swing, in fact I would say from the bottom, but at least this portion, it was almost vertical from 16,400 to 18,000 zone. It was almost vertical. So we hardly had any major correction. It was very narrow range kind of trading for a couple of sessions, and then followed by the up move. So after this decisive candle on the daily chart, next week it's going to be critical whether we are going to hold this line or not. So in case if we re-enter into this channel, then possibility of price-wise correction would be high. Otherwise, we are going to see time-wise correction again. Means anything closer to 17,600, 700 zone would access the immediate support. Market will consolidate in a range with closing above this zone largely, and then will gradually inch toward the 18,100, 18,350 zone. But in case if we re-enter into this channel, then possibility of a decent correction towards the level of around 17,300 to 17,400 zone. That's the major area basically, where for the next week at least, where we have multiple support. So first is going to be 17,600 once we are going to enter the channel, and then 17,300 to 400 zone. That's the area basically where we have 20 days of exponential moving average also, that would help alongside with this previous consolidation area, wherein 17,400 zone, wherein market respected or spent some time before this next swing. So this is what the indications are. So just to reiterate that it's all depends whether we are going to re-enter into this channel or not. So as long as we are trading about this, it will be more of time wise, means will be more of like spending a couple of sessions, or maybe more in a very narrow range, and then we'll gradually inch toward the previous highs, or make a new high. In case if we re-enter this zone, then the price wise correction may retrace this index towards the level of around 17,300. So that's the idea basically, that 17,700 is the pivot. Jab tak iske upar hai, then things are okay. We need not to worry. And otherwise also is something which is not to worry about, to be honest, because it's when a vertical move happens, so it's prudent that market should see some consolidation and some profit taking. When the trend is very strong, then we don't see any major price correction. Otherwise, it's prudent, like this kind of retracement, wherein we also see price also coming down. Unlike this, wherein intraday we used to see Nifty making a decline, but by the end of the day, it used to close around the day's high. So that kind of consolidation usually happens when the buying interest is very high, and people are chasing stocks. So after this, indications are in the favor that we might see some profit taking and consolidation, and that could result in penetrating this zone for a brief. But broadly, the trend is going to remain positive as long as we are holding 17,300. Now, next comes the banking index, basically the hero who is not only outperforming the benchmark, but also helping the index to inch higher, despite the underperformance by a few sectors, and I would say rather non-performance by these few sectors, and this decline in line with what we were discussing about Nifty. Banking index also declined sharply today, and it underperformed the index. It shed over 1.5% today. And now, earlier we were discussing this, that 35,500, in case if we manage to cross, then we are inching towards 40,200 zone. So it did close above that zone in yesterday's trade, but it couldn't sustain. And today we saw that, from the morning, the bias was on the profit taking side, and it ended almost clear to the day's lows as well. So keeping that in mind, we feel that the outperformance which we were seeing in the banking index for quite some time now, that might subside, and some other sectors might take the lead from here on. It doesn't mean that we are bearish on the banking index. Now we believe that it will trade largely in line with the Nifty. Keeping that in mind, it may also retrace further, because we hardly had any major resistance like Nifty that we were discussing earlier. So for banking index, this gap, we may see this gap getting filled. So this zone close to around, let's say 38,400, 37,900. That would be the area basically where we have major support. So around those levels, definitely it makes sense to go for long positions, considering the overall buoyancy, considering the overall trend, and mostly private banking name, they still looking very strong to us. So it's just the profit taking phase that we are seeing in the banking index. And from the PSU baskets, SBI, Can Bank, and Bank of Baroda. Rest, please, extra counters, please avoid, because we are not going to see any major participation. And whenever we are going to see the reaction, means a strong corrective phase, the rest of the pack is going to underperform by big margin. So prefer private banking space once we see any dip in this range, 38,400, 37,900. That would be the ideal area to start accumulating the private banking names again. Upside, 39,400, 500, this red line is going to act as the immediate resistance. Like we need to sustain this zone to inch toward 40,000 mark, as we were discussing earlier. So in line with the Nifty, we expect profit taking, some consolidation in the banking index, but it doesn't mean that the view has changed. The overall trend is still positive, and whatever profit taking that we are going to see till 37,900 zone, it should be considered as a buying opportunity with preference towards the private banking names. Now, since we are talking about correction in the key indices, so what to expect from these stocks? So stocks will continue to find buying opportunity, on the stock specific front, though it will not be in a similar kind of buying interest, in the corrective phase which we were seeing earlier. But yes, selectively we'll continue to find opportunities across the board. Cement specifically, of late we have seen very strong traction, and that's why we have selected ACC from that list. So you can see that a major consolidation, we have seen that break of late, and today, despite the negativity which markets were experiencing, it ended with the gains above that zone with decent volumes. So all this indicates that even if the market corrects, we are not going to see the underperformance from the cement space. So ACC, Ambuja, Dalmia, Ultratech, India Cements, all these cement counters look fine to us. It's just that they might not see very decisive move and as against the market, but yeah, outperformance should be there. And if there'll be any pause or some consolidation in the market, then you'll see the kind of outperformance from the cement space from here on, at least for the next week. That is what the indications are. So ACC should be on your radar for the long trade. Next stock, Tata Communication. So this stock is also witnessing gradual recovery after testing the major supports on the weekly charts around the long-term moving averages, and now we are seeing a gradual recovery. See, after this recovery from the last couple of weeks, we are seeing this stock witnessing a base formation around the major averages, and now it looks set for the next leg of up move. So again, there could be some pause due to market correction, but otherwise we feel that the risk reward, because we have this base formation closer to around 1050, 1040 zone, so the risk reward is more favorable for long position, considering the strong base that we have. At the same time, the kind of buoyancy that we are seeing in the stock since last 2-3 months. So Tata Communication should be considered if the markets give you the opportunity to go long. Now, what if the profit taking extends further and the quantum is slightly on the higher side? Then look for the stocks which are actually looking weak. So first name comes to our mind is Apollo Hospital. So why Apollo Hospital? See, after this distribution breakdown, this trend line that you can see, the stock retraced very sharply, and then we saw a bit of consolidation followed by the gradual up move. It retested that zone, that breakdown zone, but it couldn't sustain, and it slipped very sharply. And now it's trading around the conclusion of this major moving averages, and chart pattern indicates that it might break this area and inch further lower. So we believe that in case if there will be any profit taking in the market, this stock may retrace further, and considering the resistance around this area, so we are not going to see any major swing on the positive side in case if the market resumes a trend as well. So in short, it's going to underperform the market, and you can look for shorting opportunity below 4100 mark in Apollo Hospitals. And lastly on the list, ONGC. So the stock has been trading in a clear downtrend. The last leg of the decline was very sharp from 155 to 120. It has been witnessing gradual recovery from last 3-4 weeks, but again it has reached closer to that major hurdle of around 140, where we have multiple resistances, means the price resistance, at the same time the moving average resistance. So all indications are in the favor, whether we are going to see some profit taking towards a level of around 130, 128, maybe lower in the next week, or a very range bound move with a strong hurdle at 140. So ONGC would act, could be the counter to go short in case if the market further corrects next week. So just to sum it up, Nifty, it's a critical zone is 17,700. That's the this trend line that is going to re-enter. So that would decide whether we are going to see the price-wise correction or time-wise correction. And accordingly, these levels should act as a support and resistance. Banking, we expect the outperformance to end from here, and it will trade largely in line with the index. So, but the positivity it is is still there. So any dip towards the support zone, that is 37,900 to 38,400, that remains the critical zone to accumulate private banking names, not to go short in the market. ACC and Tata Communication, both stock look strong to us. So, as and when we get the buying opportunity, these counters can be considered. And similarly, for the shorting opportunity, Apollo Hospital and ONGC. So that is all from the presentation part. Now we'll have a quick poll, and then we'll start with the Q&A session. So please quickly fill this poll, and in case if you have any questions, please put those questions using that Q&A tab on your screen. And I'll request that restrict your questions to the sectors, to the indices which we have discussed during the presentation. No individual stock specific queries, please. So please quickly fill this so that we can start with the Q&A session. All right, so we have a couple of queries. Okay, so I can't read this name. It's an individual stock specific query on network 18, so that we can't take. In case if the time is going to allow, we'll try address few stock specific queries also. And in case if something is related to the index major that might benefit the others, you can definitely ask. But restrict your queries to the sectors and the stocks that we have discussed. So for Nifty 50, the levels that we have discussed is I'll just show my screen again so that those who joined us late. So I hope you can see the levels which are mentioned here. That 17,600 to 17,300, this zone would act as a support area. So this yellow line and this area, closer to this area, we're going to see the market taking support in case if it penetrates this red line. That yellow line, Mr. Manoj Prabhakar, I've asked this. What this yellow line indicates is it indicates the 20 days of exponential moving average, which we, as per the technical analysis, assume as the first line of defense in case if we are seeing some correction or some profit taking in the market or any stock. So what is the reason Mr. Gagan have asked for this today's fall? So see, reason I feel that as a trader, to be honest, because there is something which is important to address. We should not look for the reasons. Instead, like you should be prepared that today could be the market wherein all my position might hit the stops. What and why I'm saying this is that as a trader, you should not bother about the external parameters and external factors which are not in our control. The factors which are in control is maintaining stops, maintaining position sizing. So in case if you're stuck in few stocks or index position, my recommendation is to not to look for clues which looks positive to you, as though we have discussed that the overall trend is still positive and we might see recovery. But in the meanwhile, stock specific position can turn otherwise. So the idea is whenever we are trading, we should know our risk appetite. We should know, what kind of positioning that we should have. Means whether I should go ahead with the leverage position and continue with that overnight trade without keeping any stop loss, or in case if I am not comfortable holding this position, so should I exit? So all these questions should be answered before taking the trade. And just to address this, there were multiple factors. I would say that after 4 or 5 weeks of rise, it's prudent that participant look for profit booking opportunity. So that could be one reason. 18,000, the psychological hurdle in the index, that could be the second reason why we saw that profit taking in the market. There's no specific reason as such, because theories can be anything, but the practical reason is that you try to take some profit off the table after such a strong move where we have hardly seen any correction. So market got that opportunity, and then we saw that in the stock specific front, especially the decline was severe. Okay, the next question is from Mr. Rishudas. Can we expect the continuous boom in the power sector, or will there be any correction? So power sector, in the energy space, I would rather say that it's a mixed bag. Of late, we have seen this, OMCs, select counters from gas distribution name. They have done well. NTPC from the power basket. But it's not that all these stocks or all the participants, all the constituents are doing well. So OMCs, after a marginal rebound, we are again seeing profit taking. So sustainability is something which is lacking. In fact, we've just discussed ONGC that could be the potentially a candidate to go short in next week. So the idea is, except like few sectors, auto, banking, financials, FMCG, these 4 or 5 sectors. Other than that, in the rest of the sectors, you tend to see mixed trend across the board. So the idea is, apart from these sectors, in fact in these sectors also now you should be very selective, because the kind of surge that we've seen in the auto pack, so there is a possibility that we might see some profit taking even in the good names. So one should not just consider that the entire, in case if the auto pack is running, then we can buy anything. So that's not the case. We are seeing profit taking in M&M, Maruti and the other counters which did pretty well. And now we are seeing Eicher, Hero MotoCo witnessing a catch-up move. So the idea is sector looks positive, but we need to be selective. NTPC, Tata Power, REC, PFC, these are some of the names from the power and distribution and related sectors which could do well in days to come. So Mr. Anand Chenji have asked, will the market touch 17,000 by the end of 2022? So I'm hoping, Mr. Anand, that you are asking for Sensex, not Nifty. Jokes apart, yeah, possibility is there that, because the kind of surge that we have seen in the market from 15,200 to 18,000, and we are just whiskers away from the record highs. So this level of 60,000 or maybe above is something that how the market are going to perform in the next phase of the correction. So how deeper the correction would be, that would be the decisive factor. As of now, indications are in the favor that closer to around 17,200, 300, that should be the decisive area, basically, where we have multiple supports, and market should respect this area considering the kind of participation that we have seen from the foreign investor as well. But the prudent approach is not to look for any particular target, just participate in the trend. And the trend says that to be on a positive side. In between, we are going to see correction at times time-wise, at time price-wise. So whenever we see price-wise correction, means the markets are going to correct from, let's say, 18,000 to 17,300. In that period, switch to defensives, means FMCG, pharma, that tends to give you that protection which is required. Otherwise, once we have this confirmation that the correction is over, then you can start looking for the outperformers which we were discussing earlier, that auto, FMCG, pharma, auto, FMCG, banking, financials. So that is how, the kind of churning that is required in the market like this. So though, Mr. Prabhakar is not the part of the webinar, but it's something that if somebody is a beginner and they are trying to learn the basics of market, see, most important aspect is something that I usually see, the retail investor doing wrong, is to look for stocks which are trading at the 52 weeks low, means at the record low or 52 weeks low, and looking for the opportunity to go short in the stocks which are trading at the record highs and 52-week high. So this one indicator is something that you should definitely inculcate in your trading, that whatever stock index which is trading at the 52-week high, they're trading at those levels for some reason. It's not that they're going to sustain around those levels for eternity, and they'll continue to make high. But when we are seeing that they are holding strong, they are performing well, there's no point going short. So anything closer to the 52-week high, you should consider stocks for buying opportunity. Means in case if they correct, stock like Asian Paints, Titan, the stocks which we have recently seen, SBI, ICICI Bank, they have made the record highs of late. So in case if they correct, you should look for buying opportunity, and vice versa. In case if the PSU banking names, apart from SBI, Canara Bank, Bank of Baroda, you will see some of these names witnessing a rebound. But those names should be avoided because they are still around their 52 weeks low or the record lows. So there's no point, just looking the absolute value of this stock, or assuming that the 52-week low or the all-time low is very, still they are around those levels. So in the next leg, we might see, some outperformance in these stocks. So that is not how it works. So this is one indicator without any, major help of any technical tool or any software that you can use. See, Mr. SR have asked for pharma sector outlook and for the retail pharma company and the API separately. So we are seeing mixed trend within the pharma space also, that except Sun, I can't recall any other name from the pharma space which have participated in the move, and mostly pharma names post numbers are still struggling. So be it the top API names like Diviz, Dr. Reddy, and Biocon. So Cipla, yeah, comparatively, I would keep it on second rank after Sun Pharma, that which is holding strong. But otherwise, if you see the sector, it's not participating as such in the market run. So I feel that especially in the market like this, wherein we are seeing the rate sensitive doing well, betting on pharma names for the short term are not going to yield results. So selectively, yes, you can look for opportunity in some of these name, from the pharma space, but I don't think so. That makes sense, especially when market resumes the trend. As I've said, when the market corrects, definitely then you can look for some of these FMCG and pharma names. But otherwise, in the market like this, at present, I seriously doubt that we're going to see the outperformance from the pharma space. For short term, it's an avoid. Long term, yes, you can selectively look for the counters. Like Diviz, we have seen a decent correction, though it may correct further. So you can gradually accumulate. And Granules is one such name. We have seen a decent correction that can also be considered from the long term perspective. Yes, another sector which people are waiting for some action is IT, which Momita Bala have asked. So see, IT. In fact, I'm also very closely keeping an eye on this particular sector for clues that what if the banking, auto, energy basket, they all start witnessing pressure. So IT have not participated yet, though we have seen a decent rebound from the bottom, but the kind of participation that we usually used to see in the IT pack, that is not there. So I feel that selectively, mid-cap IT names, they have done well. LTTS, LTI, Mindtree, these names have done well. But now, I feel that in line with what we were discussing about pharma, the IT majors, they are not still seeing a decisiveness. So Infosys, TCS, they are still, hovering in a very narrow range. So when it comes to IT pack, I would still recommend to stick with the mid-cap names, and those mid-cap names which are performing well. So like, Mindtree, LTTS, and some of these Emphasis, Coforge, they have done well. So in IT space, stick with the mid-cap IT names in case if the view is short term. Okay, next question. Okay, so next question is in the banking futures. Shubham Singh have asked, so whether we are going to see a negative opening or positive opening on Monday. So that is what we have shared, Shubham, that after this strong surge, for 4 successive weeks of rise, it's possible that market should see some price-wise correction also, which we have not seen so far. And in that case, obviously the banking index is also going to see the profit taking, because it underperformed the index today, and next week onwards, at least for a time being, to at least we expect it will trade in line. It's not going to outperform the index. It will trade largely in line after the prolonged period of outperformance. So yes, indications are in the favor that we might open flattish to negative tone in next week, or extend toward the levels which we have discussed during the webinar. So Mr. Anup, that is what we have answered when we answered about, like, are we eyeing 60,000 levels in the Sensex? So 18,500 or higher is something which is similar to 60,000 in the Sensex. So yes, possibility is there, because the surge that we had from June low 15,200 to 18,000 is almost vertical, and we are just almost there at the record highs. So 15,500, 18,500, 18,700, that's not a major challenge. The idea is how the markets are going to perform whenever we are going to see the correction, and the kind of inflows that we are seeing in the markets after a long period of foreign selling. So it's not that something that is very critical. Means the foreign inflows, the figures gives you that positivity that they are back. But otherwise, the domestic factors like earnings have done the trick, and at the same time the domestic macros, they are favorable. So all these factors put together are helping the market. So if we are going to see severe correction, so we need to seek, means the level where we are going to stop, and in the kind of correction across the board when the market corrects, means when the Nifty corrects, all these factors are going to decide where we are going to stop next. So it's not maybe in December, maybe before that we will test those levels. See, metal sector outlook, we have done well. In fact, I would say, that after those news of, global slowdown and China COVID restrictions and other factors like, there was an indication that markets might not, give favorable views to the metal stock. And initially, yes, that was the case, that we saw very sharp reaction. But again, we are seeing, gradual recovery across the metal bag, both ferrous, non-ferrous. And when it comes to stocks, but one needs to be selective. Again, in this space also, one need to be selective, because if we talk about the PSU's name, they are not participating, in comparison to what we are seeing the private names like Tata Steel, JSW Steel, General Steel and Power. They have done well, in this recent recovery, while SAIL, National Aluminium, they are still, struggling, or though there was recovery, but in comparison to what we have seen in the private names, they are still laggards. So the idea is, especially for the short term, after this recent rebound, one needs to be selective in this space as well. And JSW Steel, Tata Steel, Vedant, these are some of the names which can be considered, but one need to be strict with the stop losses, because metal usually see very sharp move on the declines as well. Okay, so I guess we have answered all the queries. Yes, so with this, we are going to end this presentation, this webinar, and next week is going to be the monthly expiry. So on next Friday, my colleague Manoj is going to take a monthly rollover webinar. So do tune in around 4 for the same. And thank you everyone for joining in.